I would now like to turn to inflation. Headline CPI inflation moderated by 105 basis points during November-December 2022 from its level of 6.8% in October 22. So October 22 it was 6.8%, and by end December, I mean going by the December data, there was a moderation of 105 basis points, and that was quite a significant moderation. This was due to a softening in food inflation on the back of sharp deflation in vegetable prices, which more than offset the inflationary pressures from cereals, protein-based food items, and spices. As a result of this earlier than anticipated steeper seasonal decline in vegetable prices, inflation for Q3 22-23 has turned out to be lower than our projections. Core inflation, that is CPI excluding food and fuel, however, remained elevated. Going ahead, the food inflation outlook will benefit from a likely bumper Rabi harvest led by wheat and oilseeds. Mandi arrivals and Kharif paddy procurement have been robust, resulting in improvement in buffer stocks of rice. All these developments augur favorably for the food inflation outlook in 2023-24. Considerable uncertainties remain on the likely trajectory of global commodity prices, including price of crude oil. Commodity prices may remain firm with the easing of COVID-19 related restrictions in some parts of the world. The ongoing pass-through of input costs, especially in services, could keep core inflation at elevated levels. The commitment to fiscal consolidation that has been carried forward in the Union Budget 23-24 and the future trajectory of reducing the gross fiscal deficit will engender an environment of macroeconomic stability. This augurs well for the inflation outlook. Further, the low volatility of the Indian rupee relative to the peer currencies limits the impact of imported price pressures and other global spillovers. Taking into account these factors and assuming an average crude oil price Indian basket at $95 per barrel, inflation is projected at 6.5% for the current financial year, that is 2022-23, with Q4 at 5.7%. On the assumption of a normal monsoon, CPI inflation, now I am giving the projection for the next year. On the assumption of a normal monsoon, CPI inflation is projected at 5.3% for 2023-24, with Q1 at 5%, Q2 at 5.4%, Q3 at 5.4%, and Q4 at 5.6%. The risks are evenly balanced. Headline inflation has moderated with negative momentum in November and December. But the stickiness of core or underlying inflation is a matter of concern. We need to see a decisive moderation in inflation. We have to remain unwavering in our commitment to bring down CPI headline inflation. Thus, monetary policy has to be tailored to ensuring a durable disinflation process. A rate hike of 25 basis points is therefore considered as appropriate at the current juncture. The reduction in the size of the rate hike provides the opportunity to evaluate the effects of the actions taken so far on the inflation outlook and on the economy at large. It also provides elbow room to weigh all incoming data and forecasts to determine appropriate actions and policy stance going forward. Monetary policy will continue to be agile and alert to the moving parts of the inflation trajectory to effectively address the challenges to the economy.